someone is doing something. That's actually what creates all the volatility. But let me make one more point. Do you know the call rate? If you hold $1 or hold $1 million and you're wanting to hold it for 30 days, you're getting SOFR, the 30-day SOFR rate. You're getting about 4.8% interest. If you actually hold $1 million of the S&P index and you sell the call 30 days out at the market, you're getting like 15% interest. If you're holding $1 million of Bitcoin, IBIT, and you sell the 30-day call, you're getting 100% interest.
Volatility is often misunderstood, but in the world of Bitcoin, it's not a flaw, it's a feature. While traditional assets offer predictable returns, Bitcoin's price fluctuations unlock unparalleled opportunities for growth and wealth creation. As Michael Saylor explains in this interview, its volatility isn't a weakness. It's a dynamic feature that creates immense potential for those who understand how to harness it. In traditional finance, a bond might yield 5% annually, and a well-performing stock portfolio could return 10 to 15% over the same period. These figures represent stability, but are bound by the constraints of centralized systems and institutional oversight. Bitcoin, however, exists outside these boundaries, operating in a global 24/7 market, where innovation and scarcity fuel its potential. Its volatility, often viewed as a risk, becomes an asset for those who understand it. Strategic investors can leverage Bitcoin's price swings to achieve exponential growth far beyond what traditional markets can offer. This isn't about incremental gains, it's about accessing a financial system that thrives on disruption and innovation. Bitcoin's decentralized architecture and finite supply challenge the old rules of finance, offering an alternative for those willing to embrace calculated risk in an era of digital transformation. Bitcoin isn't just a speculative asset, it's a financial revolution, paving the way for wealth creation on an unprecedented scale.
I think in the middle of 2000, in the summer of 2000, what drew us to Bitcoin was desperation and frustration. So initially we had 500 million in cash. It was worthless, like it was generating 0% interest. The company wasn't growing. We were under lockdowns, competing against Microsoft. So, you know, the only thing that we had in our world that was a bright spot was we had 500 million in cash and we thought maybe it was worth something. But when Jerome Powell said it's worthless for the next 4 years, we lost that, you know. So we had to do something. Our initial, you know, foray into Bitcoin was defensive, or it's just frustration, defense. It's either that or sell the company. So if you're not going to sell the company, you can die slowly, you can die quickly, or you can do a transformational acquisition. You can take a risk, and that was our transformational acquisition. What if you could buy a $500 million company growing 60% a year, which looks like its own digital monopoly, and you could bolt it on to a company that's growing not, 0 to 5% a year, that's not a monopoly. So we did that. Then Bitcoin surged, and we could opportunistically raise money via the convertible bond market, and we raised 650 million at 75 basis points, and then we raised $1 billion paying 0% coupon. And that point, I would say that stage is opportunistic. Like someone wants to give you billions of dollars of free money to actually invest in your business. Why wouldn't you? We got on the roller coaster. It went up and down. It surged, it crashed, it surged, it crashed. And I think by the beginning of 2024, it became strategic. And we realized, like, hey, we're just doing this because we've got an operating company and we can do it. And between 2021 and 2024, we raised about $10 billion of capital. So we started with 500 million. We raised another 9.5 to 10 billion more. And now, and now the question is, well, what's going to happen with crypto and what's going to happen with Bitcoin? You got the ETFs approved in January. I mean, 2024 is like year zero of institutional adoption. So the ETFs are approved in January. Everybody wrote us off and said, well, MicroStrategy is unnecessary now. What they didn't realize is the ETFs are like overnight deposits. Like you put money into BlackRock, but you can take it out of BlackRock the next day. MicroStrategy, that 40 billion, That's our money. That's permanent. You can't take it out. We have 40 billion of permanent capital. And so what we realize is our real great strategic, our strategic franchise here is we can securitize Bitcoin. So I can issue fixed income instruments, bonds, especially bonds and fixed income preferred stocks or high volatility equity. And those are all products the capital market wants. They want Bitcoin-backed securities. They either want 3x to trade, or they want 1/3 of the risk and 1/3 of the volatility to hold in a portfolio. So we announced October 30th that we were going to basically raise 21 billion of equity and debt, and that was well received by our shareholders. We just kind of said we're going to be the leader in the industry. If you want to invest in a company like ours, we're the company. And then a week later, we just had a red sweep, and November 5th was pro-crypto Congress, pro-crypto Senate, pro-crypto White House. Bitcoin surged, our stock surged. And I guess I boil it down to, it took us 4 years to get 10 billion. But by the way, it took me 30 years to get 500 million. It took me 4 years to get the next 10 billion. It took us 4 weeks to raise 13 billion more. And that's because the product you're selling is capital.
Michael Saylor highlighted Bitcoin as a revolutionary asset, likening it to a digital monopoly with unparalleled growth potential. He emphasized its role as a transformative force in modern finance, offering a hedge against inflation and a decentralized alternative to traditional monetary systems. By 2024, Bitcoin's institutional adoption, driven by ETF approvals and evolving regulations, cemented its position as a cornerstone of the global economy for MicroStrategy. Bitcoin became the foundation of a bold strategy. The company transitioned from relying on traditional assets to becoming a Bitcoin treasury powerhouse by issuing Bitcoin-backed securities bonds. An equity MicroStrategy raised over $10 billion in capital and positioned itself as a leader in the financial markets. Their innovative approach allowed them to capitalize on Bitcoin's potential while redefining how businesses integrate crypto into their operations. Let's go back to the interview and watch more clips.
So imagine I could borrow $1 billion, build a digital building in 5 days, announce that I made money on it, and borrow another $1 billion. I can do that every week. And that's exactly what's happening in this market. We're basically accelerating the investment cycle from 5 years to 1 week. Bitcoin is the unique radical actor here because Bitcoin is the first product that's a commodity. That's a legal definition, an asset without an issuer. And it's economically a scarcity. That is a common sense definition. It's a commodity that you can only make 21 million of for the next 1 billion years. So there is no legal commodity that's also a scarcity other than Bitcoin. And if you don't have a commodity that's a scarcity, you can't do this with 100% of your capital in a public company. Yeah, like you can't do this with a security. Like I couldn't do this trade with NVIDIA stock. Even though it's a great company, NVIDIA stock is a security, so I could never own 100% of my liquid capital or have it invested in NVIDIA. So if you wanted to do this before Bitcoin, you had to do it with gold, soybeans, oil, or real estate. And they all underperform the S&P, and they all have less vol in the S&P. So if your hurdle rate is 15-15, and you're showing me real estate, which is 10-10, the trade doesn't work. And so what we're doing is totally rational and simple. It's the simplest thing imaginable. If you accept the premise that Bitcoin is a real asset, that it is a commodity, and then it's 21 million, right? And once you get that idea, everything else follows naturally. And until you get that idea, you just think it's crazy magic. The performance of the underlying asset is such that the bonds never get paid back other than they get equitized. And if you look at my situation right now, I have about $40 billion of Bitcoin. I have about $7 billion of bonds. 4.2 of them are already equity. I mean, they're already effectively equity because they're trading not just above the strike price, they're trading above the call price, which is 130% of the strike price. So we could generally sometime in the future, just call them all for equity and equitize them all. So there's about $3 billion of a convertible bond on a $40 billion structure, which is zero coupon, which there's some theoretical risk that there might be more dilutive than the minimum strike. But the other point to make is these are no recourse unsecured notes. There's no lien, there's no claim, there's no EBITDA covenants. I think we paid like 30 to 35 million in interest on 7 billion in debt, Scott, a year. But I don't even have to generate the cash flow for the 30 million. I could actually sell equity in order to pay the 30 million. And we have raised 10.5. We've been generating $1 billion of equity a week. I mean, $1 billion of income and equity a week. So the real magic of this is you need an asset which is going to outperform the S&P, that's also going to stay more volatile than the S&P. And then you need a company, a public company that's 100% Bitcoin. And when you sell securities backed by Bitcoin, you need to buy the Bitcoin with it. And because you're actually feeding back the capital back into the system, it's like a triple amplifier, because it's driving up your assets, it's driving up your volatility, and it's driving up the price of Bitcoin.
Bitcoin's market action is predicted to grow more unstable, making it difficult for bulls to make gains according to CryptoQuant. Analysis: the 14-day choppiness index has entered an early zone, indicating corrective moves amid consolidation. This predicts that Bitcoin's price will drop off following its recent flash volatility. The choppiness index operates on a range of 0 to 100, with higher values suggesting choppier market circumstances. In contrast, a low figure indicates that the market is trending. The indicator registered 56.7, indicating a move toward choppier conditions. This move is expected to cause significant price swings. Therefore, traders must exercise caution. Historic ICAL statistics indicate that lengthier consolidation periods result in more dramatic returns to trend. However, in the medium term, Bitcoin bulls may endure frustratingly delayed price discovery. When considering possible Bitcoin price objectives, CryptoQuant's study emphasizes the impact of market psychology and the profitability of speculative traders. Short-term investors will observe profit milestones at $110,000 and $120,000, which correspond to standard deviations on an index evaluating their overall realized price. These amounts are predicted to generate substantial resistance, with $120,000 carrying a significant psychological and emotional weight as traders connect with psychological levels. $120,000 is expected to become a more significant consolidation camp. The realized price of short-term holders is an important indicator for determining market sentiment. Their realized price equals the price at which they purchased Aircoins. Short-term holders' realized prices can be used to identify likely levels of support and resistance. In this perspective, the realized price of short-term holders indicates that $110,000 and $120,000 are important levels to monitor. These levels are likely to attract traders' attention, resulting in increased price volatility. Don't forget to like and subscribe, and let's keep this bull run going.